This is the Stocks with Josh show. Thank you for joining me. I've got some hot news stories to go over with you, and I'm going to give you a fresh view of my view of the S&P 500. How did it react to some of those news stories today? And how is this particular V-shaped recovery different or the same from 2020 sell-off and recovery? I'm going to go over that with you guys today. Before you sell your APLD, I've got some fresh lines in the sand for you there. A possible area where if we did pull back to, we might bounce. Another breakout scenario and where the up move might come to an end. Do I think that the up move is over now? No, I think this thing still has legs. And so we're going to be paying attention to APLD. I've got that for you guys today. We got to talk a little bit about this crazy interview that the CEO of Palantir had on CNBC today. I'm going to briefly cover that. And of course, what was the big catalyst for the day that really turned out to be a nothing burger? Well, the conversation between President Trump and President Xi. China and the US presidents talked today, and not much came out of it. The markets didn't really react too much. There was a little pop up when the news story came out that they were talking. Then we sort of bled off. And then when the conversation was over, we got another little pop up, but then we bled off. And so it seems to me that the market is less concerned about what came out of that conversation and more concerned about the jobs data that's coming out tomorrow. I've talked about it all week long that the market catalyst ahead was going to be those non-farm payroll numbers, which are coming out tomorrow before the market opens, and that could be a major shift for this market. What direction are we currently going with nice, beautiful, consistent strength? Well, we're going up. And so if we shift or we pivot, well, you guys know what happens next. Thank you for joining me. Thank you for dropping a heart in the comments. Thank you for hitting subscribe if you need help understanding the charts a little bit better and interpreting the news events and what to keep your watch for in the coming days. That's what I'm going to lay out for you today. I appreciate each and every one of you. Thank you for hitting that like and subscribe. All right, let's talk a little bit about this interview of the CEO of Palantir, Alex Karp, on CNBC today. The dude showed up in a white t-shirt, which was fine. He was a bit informal, but it was really quite interesting. Never before have I seen him so colorful and dramatic in his language and his communication. And he used a term over and over again in his speech that seemed to be a rally cry against, and what is that term? Woke pagans. Now, I don't know who the woke pagans are, but he kept talking about those woke pagans BS. And it was very dramatic and a little bit surprising to me. I've seen some things from him, but I never saw him get this colorful on TV. He says he did claim through his dramatic speech, he said, we are not surveilling Americans. They recently came under some pressure from the New York Times with the accusation that this new deal or new contract with the Trump administration was positioning them to surveil Americans. And he said, no. He said they simply chose us because we have the best software and the best technology in the world to do what it is that they need done. He said that, matter of fact, he said, my software and my company is designed in such a way that the data can't be abused. That's why they've come to us. Well, I guess we've got to take his word on that. He says, I'm busy building the most important software business in the world. Very bold statement. He might not be wrong. I remember when the president of NVIDIA said something very similar. He said, we're building the most important technology company in the world. Well, Palantir is on his heels saying that we are the most important software company in the world. And so far, the stock price agrees with him. Then the last thing that I noted that he said is AI is dangerous. Either we win or China will win. At the end of this speech, and I'm just going to play you a very small clip of it. So check this out real quick, and then I'm going to let you know what the CNBC commentator said when he was done. Watch this piece with me.
You just called it dangerous. So how do we mitigate the risk, catastrophic risk, while also beating China?
No, sorry. Anything powerful is dangerous, right? So it's like you can't say AI is just going to be unmitigated good or bad. Well, I'll tell you what. We have honest discussions about tracking where it's going, how close are we to AGI, what is working, who are the people doing it. You know, I welcome a discussion about who is in charge of these technologies. Great. You know, you have people on the left and increasingly on the right who just think I'm a shaman person gathering money and data. Magically, we just show up. It just happens. It just happens. Yeah, it just happens. Yeah, just magically. And we've got to fight against that. We've got to educate our populace. We've got to focus on meritocracy. We've got to allow a culture where the best products can win and they stay profitable. And we have to fight for that. And by the way, everyone who's on the sidelines and thinks you can get away with not fighting for these things, with honest discussions, is going to find out the other side, which is Luddite, regressive, pagan, they will win.
What did you guys think? Let me know in the comments. At the end, the gal commentator on CNBC said, so many pagans, so many pagans. That's all that could be said to this incredibly entertaining rant on the part of Palantir's CEO. I'd love to know if you guys caught it, what you thought of it. Did it make you feel better about your position in Palantir? From a boastful position, it made me think that this guy is somebody who has a clear understanding of what the vision is, and he definitely is pursuing it. From the perspective of him being very emotional and a bit over the top, it made me think, who am I investing into? I'd love to know what you guys think. And then the other big conversation of the day was between President Trump and President Xi. And this news broke from China, not here in the United States, because we hadn't been notified that they were going to talk. We actually got the breaking news from China that President Xi and Trump were in a conversation. And the way in which it was presented in China to their people was that President Trump had come to President Xi asking for the conversation, which means, from their point of view, that President Xi is the one in power because President Trump came knocking on his door saying, hey, we need to work something out, suggesting that Trump was in need. Whereas they were not knocking on our door and were not asking to speak to our president and was not trying to figure out the next step. They were not taking that position. So President Trump extended the olive branch to President Xi to get the conversations going. Overall, the market was not impressed, but there were some very interesting things that were talked about between the two parties. One, President Xi said that the United States needed to cancel the negative measures taken against China, which was basically, you got to get rid of those tariffs. They're unfair, they're adversarial, and they aren't warranted, was the idea. You should never have done this to begin with. And so a starting point of conversation from President Xi's perspective was drop those tariffs, Trump. And then President Xi did something quite interesting. He warned about Taiwan. He said, now don't start aligning with these small group of dissenters who are trying to separate Taiwan from China. Now, I know that Taiwan and China are different countries, but that's not the way that President Xi sees it. And so right off the bat, he reminded the President of the United States how important their interest was, or how committed they were to seeing Taiwan come back into the fold, back under China's control. And so this is absolutely going to continue to be a point of conflict. It's one of the reasons why the Chinese stocks have not really run or aren't sitting at all-time highs, is because the real fact that there could come out in the future an actual military conflict over the country of Taiwan. And yet again, when trade deals were the subject matter, President Xi says, don't forget that we're serious about Taiwan, and we don't want you to align with our enemies who are trying to keep these two countries separate or keep Taiwan independent. And then the last thing that came out of it, or the biggest thing that came out of it, was they said that they both invited the other to each other's respective countries. And so President Xi said, why don't you come to China? We'd love to host you, perhaps in person. We could work out a deal. That's a pretty significant event, because oftentimes if that appointment gets made to come to China, it means that everybody will be working and scrambling overtime behind the scenes to get all the details worked out, so that when they're together, perhaps in China or in the US, depending on how it plays out, when they are actually together, it's often when they announce, as if it was right then that they had a conversation and worked everything out. No, it'll all get worked out in advance. And if they come together, then you know they'll likely announce that they're taking a big step forward. So all of this does point us to perhaps something getting worked out. We know that there's been a lot of talk of the term taco trade, which is this idea that Donald Trump acts tough, carries a big stick, but then he backsteps and backpedals everything. He's trying to get a deal or trying to get people to come to the table. In this case, China didn't. All right, those are the hot news stories that drove the day. The market didn't really react much to the conversation between President Trump and President Xi because we're tired of the talk. We want to see how things actually go, what gets worked out, because right now we're dealing with the 90-day Trump extension where it's getting ready to expire. And this is why Trump has reached out to Xi, because if it does expire, it's going to cause the markets to sell off. And he knows that, President Xi. So it's given him some power in the situation. All right, before we get into the next hot news story this morning, live trading for Spylord, which is one of my crown traders with the community. It was a beautiful trade day with a nice move in the markets. They got 4 wins in today's live trade session. And tomorrow I'm going to live trade with Spylord in the community, and I'm hoping that we'll book another win. We've consistently won this week. And if you would like to join us in these types of live trade sessions where I do coaching on the charts, then come and subscribe to the Stocks with Josh Discord, the Chart Goat University, my pro trading community. I'll leave a link in the top pinned comment. It's where you can get my daily trade setups 5 days a week before the market opens. You can get teaching on charts there, and you can live trade in live trade sessions when the market opens. Today, Spylord, congratulations for those who traded with him. They had 4 wins in that session. You guys did a great job. Come check it out before tomorrow, where we're going to do it again, and I'll let you guys know how we do. It's the name of the show is the name of the website, www.stockswithjosh.com. Go to there and you can join up. All right, let's get into one of the other big news events here on the day, which was actually Circle Technology Services, a brand new ticker for Wall Street, CRCL. This is a crypto company, has IPO'd on Wall Street. These guys are the stablecoin USDC. They're the second largest stablecoin next to Tether, but this is the coin that's aligned very nicely with the regulators. And in addition to that, they've got Wall Street on board. They've done something by coming public, which makes them the better solution for stablecoins in the crypto market. And why is it the better solution? Because when you come to Wall Street, you've got to have quarterly earnings. You've got to open up your books. You got to provide documentation to the exchanges that show that you're in compliance. And this allows all of us to trust them more, and it provides more stability for crypto overall. Now, the real race has begun with this strategic move by USDC to become the #1 stablecoin in crypto. Now, I'm just going to tell you before I get into the bullish or bearish dynamics of this new company that I was shocked at the price action on this chart. This stock should have opened up at around $31 to $50, and that would have been pricey. If it had opened up at $31, it would have priced the company at around $6 billion, which makes sense in line with their assets and in line with their profits. But you got to know how things get crazy. That FOMO is real. Companies vying to get a large position in this company on day one. BlackRock in particular said that they were going to try to gobble up a huge chunk of the shares. They want to be one of the biggest shareholders of this new and upcoming crypto company on Wall Street. And it skyrocketed after just coming out here. It actually IPO'd this morning, but you don't get to see the price action. I was watching the chart all morning long, and it wasn't until 11 a.m. Eastern time that some candles began to appear, and this thing opened up at around $75, which was just incredible. In my opinion, it's too darn expensive. It shot up to $100, right? It just means that there was a real interest in this company, and then it began to sell off. Now, this is one to watch. We're going to watch if it can break above its previous high, and that means it could go higher. Where could it go? 130, 150. when a brand new IPO like this comes on the scene, it's in price discovery. It's whatever anybody's willing to buy. And when you've got companies like BlackRock showing up saying, we want a long-term position of ownership in this company because they want to own crypto, then you know this is a serious game. So this is one to keep on your radar. There's not much in the chart to go over with you guys today. The chart ticker again is CRCL, and this is going to be like Coinbase. It's going to be one of these go-to stocks when crypto begins to move. And I'll tell you right now that if we do get another Bitcoin push up to 120,000 or something like that in an altcoin season, got to keep your eye on CRCL because it will run with the flock. And that's the problem with the stock as well, is that when crypto begins to fizzle out and fade, these types of companies are going to absolutely get decimated. And it's likely that we will go from the top of $100. Now, the top's not set, but that's the top for today. It's likely that we'll go all the way back to the IPO price that was predetermined before before the retail could buy. It's likely that it would go all the way down to $31 and below. So be careful about buying today. There'll be a time to get into this. It's going to go crazy for a while. And yes, you could do a couple scalp trades on it. You could have bought in at 75 and ran it up to 100. But this is not the moment where you buy and hold. The same thing happened with Coinbase. When it came out and it IPO'd, it ripped and it then fell for a long time, and there was a way to get a better price by being patient on it. So the bearish ideas behind Circle, after I pumped it up here a little bit and told you how smart money is drooling over it right now, the bearish idea is that USDC, one of the reasons why they made this move is they've been consistently losing market share to Tether. Remember, they're number 2. They're gunning for that number 1 spot, and Tether's holding it right now. But this does give them a huge advantage above Tether because now they're a more trusted, publicly traded company with open books. So it helps them out quite a bit. Circle is still not profitable, even though they had revenues in the billions before they IPO'd. They weren't profitable then, right? And their number 1 position is in U.S. government bonds. That's how they make money. You put your money into USDC and you take that USDC to go buy some crypto. While they're holding your money, they drop it into bonds and they take the money that the government pays them, that yield from the federal government. Well, what's the other problem you guys can foresee with this? You know, our bonds are suspect right now because we have a debt problem. So we've got a company that's building their future profits on our debt problem and our ability to continue to pay interest on everybody who buys bonds to the tune of trillions of dollars, which soon this year could exceed all of the revenues taken in by the federal government from taxes. So that's right. We could begin to pay interest on our bonds, right? Our debt that we've sold could begin to exceed all the money that comes in from all of the companies and all the individuals from our tax revenues. So Circle's built on that. Keep that in mind. I like the company. I'll keep an eye on the charts, but I'm going over some of the bearish concerns so that you guys can keep the bullishness into perspective. So their revenue would also be based on these high interest rates that they're getting through the bonds. Why are they getting high interest rates? Because the Fed has elevated rates, forcing the United States to pay more for their debt when they go to sell it in the form of bonds. So if the Fed cuts the rates, well, then they get to cut what they pay for selling their debt. And then it means that Circle will be less profitable because they're not getting paid as much from the US government for buying those bonds. Keep all of that into consideration. Overall, crypto adoption is still cyclical, which means that Circle's success is going to be tied to the 4-year bull bear pump winter rally of Bitcoin. There's some people don't believe that exists anymore. I don't see the evidence that it doesn't, which means that Circle is going to be up at $100 a share, but one day it could come all the way down to $10 a share in the winter of the Bitcoin season if we end up getting one, which I think we will. That's when we're going to have to come back and revisit a company like Circle when everybody's forgotten about it. That's when it's going to be worth taking risk on this company. But it's a long-term view. For the time being, it's hot and it's running up. So on the positive side of Circle, they've got the backing, they've got the regulation, and now they're building out their infrastructure on Wall Street. They've got a seat at the table of some of the most powerful and important and rich companies and investment firms in the world, and it all got sealed today. They're fighting for that number one spot. So watch out, Tether. Circle's coming for you. All right, let's talk about an AI stock that's made a lot of people rich in just the last 24 hours. Some of you might have locked in some gains. I'm going to give you some perspective of where it could still go. Has it reached its top right now? I don't think so, because of all the reasons I've given you over the last couple of days. We take into consideration candle theory. We take into consideration whether it's overbought on the RSI on the daily time frame, and it doesn't have warning signals. It doesn't mean that it couldn't pull back. It just means that it's still hot. Now, this is one that I think that if you sell or sold, you might have got out too early because it could still have room higher. Now, before I give you the charts, I just want to tell you that no matter what happens, we've got to take into consideration D-Day. What's D-Day? D-Day is this non-farm payroll report tomorrow. If it comes out good and the markets spike, well, then the technicals I give you for APLD today will likely get hit to the upside. If it comes out badly, 8:30 a.m. tomorrow Eastern Standard Time, then the line I give you in the sand, we could come back to, and it could be the buying opportunity. It could be where APLD bounces. So let me take you into the charts and tell you where I think the important trend lines on APLD are. I'm going to give you the top and the downside as well as your stop loss plan. Let's get into those charts. Okay, the first thing I want to point out to you is we're looking at weekly candles, which means each and every one of these candles is 1 week of price action in the market. And you can see that I've identified an ascending channel. It's been in a price action ascension, which means it's been bullish and moving up. But it wasn't until it broke above the middle of this channel just the other day that we have this massive volume node down here. It's the largest volume bar on the entire history of the chart, even bigger than this buying reversal green bar down here, where everybody that was smart loaded up when it got down to 89 cents back in 2022. This bar here at $7 was significantly bigger. Why would this bar be so big? Well, this shows you the institutions showed up and said they wanted a position in APLD. Now, I want to explain to you something important about support and resistance. Pretty much this was the floor. It hit the basement down here at 80 cents. Well, where's the top? Well, it's going to be the fall off price from when this thing broke down last, right? And that was in April 11th of 2022, and that's at 1680, and you see it marked on my chart, okay? And so this is the most significant area of resistance that APLD could hit. And with this significant move and this significant volume that we just identified, one of the biggest, most notable bars on this chart was this massive volume bar that we just got. It's very likely that we will hit 1680 before this up party ends. Now, I also want to show you a little bit the characteristics of how this is traded in the past. And you can see that in the past, when we crossed this channel that I've built, this being the channel here, when we've crossed the middle of it in the past, you can see that at that time, it got a mammoth green candle, right? So this was another moment in which it broke out. And remember, these are weekly candles. So the week that it broke out, it made this huge move up, but it wasn't over. It spent the next couple weeks vacillating in this price range until it came up and hit this, hit the top of my ascending channel, which gave us the top mark of our ascending channel. The main thing I want to point out to you is that it didn't collapse and begin to go back down. It went sideways, making new highs each week along the way. We're premature on this right now, okay? We're premature to be getting out of APLD because I think that we will consolidate in this range between 1330 and 1680. And so I think if you want to swing trade or scalp this, there's going to be opportunity to get in around 1330 and to get out around 1680. Now, I've also got one more area identified on my chart because this is the area where I think if tomorrow we get some bad news with the non-farm payrolls, if we were to have a little dip, I'd be watching this buy zone of between 1190 and 1260 because I think that we would bounce there. And I want you to know that even though I've got this 1330 marked on the chart with a downward facing red arrow, if we close on a daily time frame beneath 1330, expect this 1190 to 1260 range to be realized. But if we bounce at 1190 to 1260, that would be very healthy. That would only be a portion of this large candle move, which would all be in line with a continuation to the upside. So the big thing I wanted you guys to hear about APLD is it's not over. And this might be a opportunity where any dip, anything between the 1150 to 1350 range, I think is going to be a very healthy opportunity to get back up to the $15, $16 range. And so this one's hot. Keep your eye on it. You know I am. But I wanted you guys to know exactly what I thought of those charts. Let me take a few more minutes here. I want to show you something on the SPY. But before I show it to you, I want to tell you that as of now, all's well on Wall Street. The SPY and the move up that we've been seeing and the supporting volume and the supporting momentum are all on a positive checklist. Everything is checking out for a bullish move up. The only thing that's going to change this is going to be a black or orange swan event. And I think you guys know what I'm talking about. It would be the president creating some sort of an event, a failed deal, a bad conversation with EU leaders or President Xi, which could cause the markets to crash. For the time being, they're going to continue to move to the upside till they get that bad or good news. But we're so high up on the S&P 500 chart and we continue to melt up into resistance that if on the alternative side, he comes out with a good news story or inflation or the job numbers come in a Goldilocks environment, then these markets can rip. And I told you guys that if we close this week out above 595 on the S&P 500, it brings into focus from that technical perspective of the confirmed morning star pattern, it brings into perspective the opportunity to get as high as 633 on the S&P 500 potentially very soon. So I'm not predicting that we are blasting higher. I'm telling you that the conditions that we're going into on Friday do not show any form of stealth selling on the S&P 500. It does not show fear. It doesn't show momentum fading. There's a slight amount of bearish divergence on the daily chart, but very minimal. And you can run with bearish divergence on an index like that. You can run for a month. So it would just be the beginnings of a little bit of profit taking as people are getting closer to this data, which could be a concern. But largely, it's staying high and tight. Let's go into the S&P 500 chart. Price is truth. These green candles, which have been stacking one on top of the other, is the market telling you that it's bullish, and we're going to believe those green candles because price is truth. But now, the second dynamic that you always look for to see if there's any undercurrent of deception on the part of smart money is volume. The real reason why I did that video about a month ago, right around here, that said buy, 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 was because this volume convinced me that Wall Street was going to be going up. Now, the next week, we had a little dip, right? A little fake out. And I told people this is likely a fake out. Hold the line, hold the line. And then we began to rip higher. Now, here we are. We're very close to all-time highs. Very, very close to all-time highs. And here's the main thing that I want to point out to you. We've got to go back and look at the story that volume tells. What is the story that volume is telling? Well, let's go down here and look at it. Each of these green bars you see down here is higher than the last. So while we've been climbing, volume has been climbing. That is not a market trying to trick everybody. That's a market that's slowly melting up and getting more and more interested buyers. Now, I want to point out the past to you. Let's go into the past and look at the 2020 drop. This is a market that actually continued all the way up to a full V-shaped recovery, gave a little vacillation, then continued the climb higher. And it actually did it on significantly weaker decreasing volume. So look at how it climbed and was a full V-shaped recovery, but volume largely the entire time was beneath this 20 MA. That's the yellow line that you see on the volume bars beneath. And the fact that all of these volume nodes were beneath that meant that they were all decreasing volume. And you can see that as time went by, volume went lower and lower and lower, and market went higher and higher and higher. So how is this time different? Well, this time the market's climbing and volume is climbing. What does that mean? It means that this could be a huge moment, right? This could be a huge moment. When you see volume and price aligning and us getting this full V-shaped recovery, it could be setting up for an explosive move higher all the way to 633 and beyond on the S&P 500. So at bare minimum, don't get overly bearish. We don't have the proof that we should be getting into bearish plays. Even though we're at the top of the market and it feels risky, we don't have the evidence that it's turning around yet. And I'm convinced that we're probably not going to see it technically. What we might see is some increased volatility. We're keeping our eye on the VIX, and as long as the VIX is under 20, we stay invested and we continue to invest. I will tell you guys that as we get into this level, the type of thing that could happen would be a surprise, hard, high volume sell-off moment based on a bad news event. If that happens, we'll have to look at it then. But for the time being, all's well on Wall Street. I'd love to hear your guys' opinion. Let me know what you think. Is it a time to take profits, or is it time to put more money to work? What do you guys think of this current market? I'd love to hear from you. Peace and blessings. Thank you for joining me. Don't miss tomorrow's live trade session in the Stocks with Josh Discord. We've been making money. Let's see if we do it again. I'll let you know. Take care.